The Dow had the opportunity to start showing some bullish bias with the bullish flutter kicker signal. Very simple signal to recognize. You have a down day where it opens here and closes here. The next day they gap it up above the previous day's open. And in this case they did a doji, or an indecisive trading day. And we know the simple rule of the doji. Prices are usually going to move in the direction of how they open after a doji. So a positive open the next day told us they're more than likely going to move positive, which becomes what we call a bullish flutter kicker, based on that if you took this little flutter out of here, you essentially have a kicker signal, which is the strongest of candlestick signals. So looking for bullish confirmation today would have told us that this was probably a support level in here, and they're going to come back up, make this a little bit smaller, come back up to at least the top of the channel, giving us a few days of bullish trading. However, as indicated in today's trading, they took it right back down as a doji. So what that does, as far as our analysis, it says the investor sentiment really hasn't changed. It's the same sentiment that we've witnessed for the last month and a half in this current trend, as well as the last 3 months in the indecisive trend prior to that. Let me make this smaller. As can be seen, it didn't move. The markets haven't moved all summer, dropped one big day, and then moved sideways again this fall. So again, indecisiveness and the sideways nature of the market is still, I guess, the prime analytical factor. However, that does not eliminate the probabilities using simple candlestick scanning techniques of finding trades that are worthwhile. You can see the fry pan bottom, the slow rounding bottom, and then the breakout. So our recommendation on this breakout is that we're still making good money on a situation that we can identify, because the Japanese race traders indicated what a fry pan bottom was doing. It was a buildup of investor sentiment. And remember what the patterns and signals tell you. They are the accumulative knowledge of everybody buying and selling during a particular time frame. And when this started moving up, it was still during a time when we know the general market was moving literally sideways. So it wouldn't be helping the stock as far as a trend, but the investor sentiment could be identified that there was bullish sentiment coming into this trade. The same analysis can be applied to Amazon. We were buying Amazon after the buy signals right off the 50-day moving average and taking profits when we started seeing candlestick sell signals like the bearish left-right combo, and then a close below the T-line when stochastics were up here in the overbought condition. We started considering going short, but we knew that there wasn't that much time for the October options for this big price move. So either you shorted the stock, or instead of buying puts for October, which would have been expensive, we did the put spreads, making it much more viable. And the reason we picked out our put spreads suggestions was based upon putting Fibonacci retracement numbers on here of where this might go in the next week and a half or 2 weeks going into October expiration. And the first level was right here at around the $812 area. So that meant we could buy the puts for October, the 822.50s, and sell the puts for the 812.50s for approximately $3.50 back here, knowing that if it moved down to the first Fibonacci number, those would move to about the $10 range. So the advantage we have with candlestick analysis is not only seeing what direction something's moving, and in this case with close below the T-line and trading below the T-line, we just stay short until we see a buy signal. And if we have to figure out the timing, we could also see what targets they might reach in a specific time frame. That'll be it. We'll see you in the chat rooms.